Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Tony Dong Jising. Now let's start today's Seeking Medical Advice Good Night session. Oh, there's something I've been meaning to mention but kept forgetting for several days. Starting next Monday, daylight saving time in the US will end. Eastern Daylight Time will be over. We'll be switching back to standard time, so our Good Night live stream will move from 10 p.m. to 9 p.m. Please take note of this change. Just wanted to give everyone a special reminder. Please remember that starting next week, we'll begin at 9 p.m., okay? Alright then, let's take a look at today's session. We need to move everyone over. Actually, there are 2 main points, or rather 3 main points to focus on. The first and second points are still related to the current situation, and then the second point is about some actions taken by the US government. Alright, let's take a look at that. Bloomberg, this Thursday morning, commented on the closing of the European and US stock markets. Regarding the European markets, they mentioned that the market continues to digest news about the Iran conflict, and it's now entered its 6th day. There are no signs of a resolution in the short time, and it's the same situation with the US stock market. As we mentioned yesterday, that suggestion to take out a little notebook and look back at past experiences. Of course, the original text is in English, so for professional investors in Europe and the US, the users there, just like us, must have seen this news, so everyone's concerns are pretty much the same. Alright, so today let's take a look at why we still have to say that this war could drag on for a long time. At least it won't end as quickly as Trump claims. First, let's take a look at this. We're still looking at Brent. On Thursday, Brent surged by 44.993%, breaking past $85. After opening lower today, earlier it shot straight up and reached 87.2. Now, we do not know where it will close, but what we want to tell everyone is this news, this information is really not good. Including, for example, a foreign media platform reported that shipping through the Strait of Hormuz has almost completely come to a halt. There was a news report today. There was a Chinese ship that passed through today, but it wasn't a cruise ship. It was a container ship, or rather a bulk carrier. But I want to remind everyone about this strait, just so we're all clear. Just like the Taiwan Strait, only ships from 2 countries are really allowed to pass through here. Strictly speaking, maybe a 3rd country, and that is China, Russia, and North Korea. But Iran and Russia are neighboring countries. They face each other across the Caspian Sea, so Russia doesn't need to send any ships to reach Iran. So this ship is probably just China making the passage. As for North Korea, it actually doesn't have much activity in terms of long-distance shipping. So, basically, what you're seeing is, whether it's the Yellow Sea or the Persian Gulf, the only ships passing through the Strait of Hormuz are basically Chinese vessels. But this kind of cargo volume actually doesn't help the overall shipping industry at all. Maybe it's just some news about the Strait of Hormuz that's causing all this. As for shipping, today oil prices are going up, and we keep saying, if oil prices keep rising, with each high higher than the last and each low also higher, then this means the troublesome thing is, it means that the turning point hasn't happened yet. Now, let's take a look. There's something called polymarket in the book, and everyone knows about it now. This is what's known as It's what's called a prediction market website. Actually, not long ago, the U.S. Commodity Futures Trading Commission, the CFTC, started paying attention to it and wants to regulate it. Either way, more and more people are looking to it for reference. Let's explain a bit. There are 4 lines here. As for the cursor, it's actually reversed here. The black line is the bottommost line, which is around March. That day, the black line is March 6th. This orange line is March 15th. The blue one is March 31st, and then this one. The green one is April 30th, so that means from March 31st to April 30th. I think this is a more reliable reference for you. So what everyone thinks is that what's shown on the company market here, when is it possible that the war might end and there could be a ceasefire? Well, looking at this, March is at 29%, so that's by the end of March, just so you have an idea. And then April is the end of April, April 30th at 48%. But actually, in April, there wasn't any real substantial breakthrough. Above 50%, there's still no clear breakthrough. Even above 50, the significance just isn't strong enough. So what does that mean? Sorry, I'll probably be on duty once every 4 weeks, so when it's my turn at the end of March, we still have to talk about the war. I know people don't want to hear about it, and I don't either, but it looks like we must discuss it at the end of March, and likely through the end of April too. Also, similarly, there's been some forecasting, this is from a survey too, about whether it's possible to reach a so-called nuclear agreement by 2027 or before the end of 2026, this year. At one point, the probability here shot up to about 55, even up to 60, somewhere between 55 and 60. That was around February or March, basically right before the bombing happened. Between 55 and 60, or even breaking through to 60, up to 65. So between 60 and 65. In other words, there really was an expectation before that a deal could be reached. But now, looking at it, the probability has dropped back to 50. I think as the war situation continues to unfold, the chances are pretty low. So what's the key point here? This is about the probability of reaching a nuclear agreement by 2027. Specifically, the probability of reaching a nuclear agreement before February 31st of this year. It really doesn't look easy at all. So that's the situation. We might see another conflict, possibly with an impact even greater than the Russia-Ukraine war, though maybe not in scale, but definitely in terms of influence. So that's what it looks like. If this drags on into next year, the impact will be huge. So I'm telling you, this conflict could become a long-term affair. From these charts here, the projected end time and the probability of reaching an agreement, I can tell you this. Are you mentally prepared for this to be a long-term situation? Now, the problem has already been brought to the table. The issue we're looking at today, seeing this problem, is even more heartbreaking than watching the Chinese Taipei team lose. Why? Because this really looks terrible. Let me start with a piece of news. Whether or not Iran's military achievements change, there's some turbulence in the Persian Gulf. Trump says he wants to personally pick Khamenei's successor. First of all, Iran has launched a new wave of missile and drone attacks in the Gulf region, targeting places like the UAE, Bahrain, Qatar, and Kuwait. Most of them have been hit. Let me tell you, these strikes are probably connected to some coordinated actions. We won't get into the details right now, unless someone asks about it later. Then we can talk specifics. But you should have a general idea. The surrounding countries are all in a state of heightened tension. Why is that? Well, attacking Iran is too expensive. Wait, no, attacking Israel is too expensive because it's farther away and you have to use missiles. So using these more expensive missiles to hit the Gulf region is comparatively, you can just use older weapons or drones. The main point here is that the goal isn't really to attack, but just to maintain a certain level of tension. That in itself is useful. That's basically what it means. Also, Trump told the website Axios, he told the media, that he except Khamenei's son, that this Mujtaba Khamenei becoming Iran's next supreme leader. Let me clarify that first. Actually, you know, a few days ago there were reports saying someone had been chosen, but it was later confirmed that this was just a rumor. The news was published by Iranian opposition media, so it looks like there hasn't been any official confirmation afterward, and we still don't know who's actually in charge or who will become the next supreme leader. But back to the question, Trump said he wants to handle it himself. He said he plans to personally get involved in the selection process. Now, let me share a comparison with everyone. The United States has never ruled Iran, not even for a single day. So if you want to have a say in the selection, it's simple. You'd have to send your troops in. Only then would you have a chance if you actually overthrew the regime and wiped everything out. Only then would you have a chance to make a selection. Besides, Iran is a theocracy. If you want them to accept your way, basically you'd have to get all of them to convert to Christianity or Catholicism, right? If they don't convert, well, a few hundred years ago, the rule was just to execute them. So let's see if you can actually do that. In fact, I think Trump is in a pretty bad spot right now. Why do I think the war will drag on and become a long-term conflict? It's because Trump's perception right now is very different from reality. If he still doesn't find a way to back down and start changing his tune, well, it looks like by the end of March or April, and as time goes on, by the end of May or June, things will come to light. If this really drags on any longer, it's only going to make things worse for the situation in the US, especially when it comes to the election in the swing states. And then, moving on, the next thing is that the issue we've been talking about has now become a public topic. The reversal of the 3D situation. So which ones are low oil prices, low government bond yields, and a weak US dollar? That is, the dollar is also low. These are what we call the 3Ds. Of course, we're usually familiar with the 3 highs, like high blood pressure, high blood sugar, and high cholesterol. But here, as we can see, after the outbreak of the US-Iran conflict, all of this completely changed. Oil prices went up, inflation surged, US Treasury yields started rising, and the US dollar regained its status as a so-called safe haven asset. So the 3Ds turned into the 3 highs. So let's quickly take a look at this. Let's talk about it. Right now, the US dollar doesn't seem particularly strong today, but it was strong yesterday, and that even caused gold prices to drop. So let's take a look at this part. The dollar's weak today, but oil and treasuries are strong. These 3 don't need to be strong simultaneously. If 2 out of 3 are up, it drives the market. You really shouldn't ignore this, because the impact can be huge. Also, let's talk about the 2-year Treasury bond. The basis points are going up, you see, they're moving upward. Now, if we look at the 10-year Treasury, the move is even bigger and started even earlier. It's also at 4.05 basis points, right? It went up to 4.1363. I mentioned this to everyone before. If you look at it, you'll see what I mean. So all those things that were supposed to stay low are now actually reversing and heading upward. Honestly, looking at the results, it's still unclear why Trump started this whole war in the first place. If you want to fight, at least have a plan for it. That's where we think the problem lies. Now, looking at US Treasuries, what we just discussed is being confirmed. The shift from the 3 lows to the 3 highs is definite. But now, problems are starting to show up little by little. First, as time goes on, people are doing more and more calculations, and the more they calculate, the more it adds up. Eventually, all that pressure is going to cause Trump to collapse. Why do we see this? Take a look at the chart on the left. This shows the main Gulf countries in the Middle East. This is specifically about the current crude oil storage situation, and it is typically measured in terms of days. Let's talk about Iraq first. Why is its number relatively low? That's because Iraq has been through several wars before, so its facilities have definitely suffered more damage than others. It's pretty bad, right? And in terms of rebuilding, the capacity hasn't increased that much either. So, as you can see here, the oil storage is relatively low, which means they only have 6 days left before the tanks are full and they can't produce anymore. And this is just crude oil. We're not even talking about natural gas yet. Also, not all Gulf countries are included here, but almost all of them are. Okay, so as we can see, Kuwait has 14 days, right? That's because, well, Kuwait actually... Okay, now look at the UAE, the United Arab Emirates. They call it rerouting. Okay, I'll use that term, since that's how it's translated as well. I'm not sure how to translate this exactly. What they mean is they basically use pipelines, so they extract the crude oil again and use pipelines to transport it to farther locations for export. That's what this means. So I use the terms with pipeline and without pipeline. Without pipeline means you don't have that routing mechanism. You don't have the system for transporting oil, or the system is full. Actually, the backup capacity of those pipelines is usually pretty low. This is just a fact, because it involves the local terrain and some other issues, so there aren't that many pipelines for transportation. They just can't build them too long. So you can see that in the UAE, without pipelines, there's only 16 days left. But if they use pipelines to reroute and export to other places, then it's 19 days. For Qatar, it's 20 days. But Saudi Arabia is in a better situation because they have a pipeline. Ever since they built that pipeline from the Arabian Gulf to the Red Sea, if they don't use the pipeline, it's 36 days until they're full. But if they use the pipeline to reroute, it's 65 days, which looks a lot better. However, let me share some unfortunate news with everyone. If you look at the report, the details mention that this pipeline in Saudi Arabia is only for Saudi customers. And as for its capacity, well, it's not even enough to handle Saudi Arabia's own supply. So the pipeline's transport capacity is probably only a fraction of Saudi Arabia's own production. That means Saudi Arabia will fill it up themselves, so the amount that can be sent to the Red Sea is actually quite limited. And here's some bad news for you. Can you even get oil out through the Red Sea? Don't forget, there's another wild card over there, the Houthis. They've blockaded the Red Sea before, right? So this time, will they use a similar tactic? Basically, only ships from countries they consider friendly can pass, while those from unfriendly countries, obviously the US, Israel, and Europe, won't be allowed through. They won't be able to get through, so that's the situation. You see, there's a glimmer of hope with Saudi Arabia, but honestly, it's not much. Your best bet is still to count on it taking 36 days. If things drag on even longer, you'll see that. More and more countries are shutting down production. And when that happens, oil prices are just going to shoot up. Boom, boom, boom. Also, there's another piece of news. The US has issued a permit. It allows Russia to sell some oil to India. Honestly, I think this is kind of funny. Giving Russia permission to export oil to India. Yeah, that's right. You're the hegemon. Technically, you can do this, but honestly, it really doesn't make much sense. Anyway, that's what we're saying. As long as the oil is shipped before March 5th, Indian companies can buy it. Even if India buys it and brings it into the country, as long as it's not resold internationally, these kinds of transactions are allowed. But I have to tell everyone, if you don't resell it, then the international oil price won't really benefit much from the situation. Look, on one hand, they want to fight, but they don't want oil prices to go up, and they also don't want Russia to benefit. Honestly, that's just impossible. And the fact that they're issuing these permits shows that the situation is actually pretty bad. Also, let's go over some details slowly. After you hear this, you'll understand why we still have to talk about the war, and how its impact is only getting bigger. You should keep this in mind. If there's a window for a rebound, you'll know what to do. Please don't hesitate. You'll have a better idea of what actions to take, maybe break things down and decide what moves to make. Now, let's take a look at the wording on the left. Roughly, So there's this American farmer named Chad. We'll call him Chad. He's in a place called Mitchell in South Dakota. South Dakota is in the Midwest of the United States. I haven't been there myself. Roughly, besides corn, I honestly don't know what else is left. It's already really desolate out there. So on Monday morning, before this, they had already applied urea as fertilizer. Chemical fertilizer, basically. Then, when they saw the war break out on Monday morning, they rushed to buy the last few truckloads of urea. The issue wasn't the price, it was about whether there was any stock left. Of course, fertilizer prices were already pretty high to begin with, but the problem is this. The Northern Hemisphere is about to start fertilizing. It's already March now. You know, in Taiwan, we used to be an agricultural society, so everyone still remembers that after March, after the busy farming season, things change. It's time to start planting rice, and not long after that, there will be a need for fertilizer. It's the same for pretty much all crops. This is the general idea. The northern hemisphere is about to start fertilizing. In the southern hemisphere, it's time to start sowing, so both hemispheres need fertilizer right now. And currently, fertilizer prices are pretty high, and it looks like there might be supply issues. Here, let me explain. If you look at the circles, they show where things are coming from. So basically, what it means is, to the countries around the Persian Gulf, since 2020, they've exported about $50 billion worth of nitrogen, which should refer to nitrogen-based fertilizers. So it's basically nitrogen fertilizer. By 2025, it'll be shipped out, and the different colors represent the export routes from different countries. All I can say is you can see it coming out of the Persian Gulf, and it shows you the routes. One of the buyers is in the United States, which shows you that this impact is global, not just regional. It's not just limited to a region or a single country. This is a global effect. So everyone is scrambling for fertilizer. Also, over here, they're talking about the price of urea. Not being able to buy it is one problem, but even if you can, how much will it cost when it's available? That's another issue altogether. On Tuesday, the report said that the price of urea had increased compared to the previous week. The price went up by $70 per ton, reaching $5.50. You can also see that in the US, some people just canceled their orders altogether, which is pretty normal. It's basically a case of goods being hoarded because they're scarce. Plus, here in the US, it's a completely capitalist market. There's really no such thing as, well, their definition of improper market behavior is pretty loose. So you see, you can see it here. This shortage of agricultural products, specifically urea, is a real issue, and it will have a bigger impact later on. Of course, when we talk about the index, it doesn't necessarily mean you'll see an immediate effect. The price of agricultural products will go up, but that doesn't necessarily mean it's just that farmers' costs will increase. In theory, these costs will be passed on, but you won't see it happen right away. Whether or not these costs get passed on, and more importantly, how prices will move, there's another key factor, the weather. And then if your crops are all growing well, then if there's a shortage, if the weather is really bad and there's a poor harvest, then prices will actually go up. But if everything goes well and there's a bumper crop, then that's tough. The prices will definitely drop and the farmers will suffer. These costs actually can't always be passed on, so it's actually pretty tough for farmers to make a living. Now, there are also two things here introducing the petrochemical industry. There's a little chart up here that's pretty interesting. Okay, let's talk about ethylene and polyethylene. The Strait of Hormuz, sometimes foreign media translated as Hormuz Strait, accounts for 12% of the world's polyethylene entering the international market. These are the 5 main chemical plastics that could potentially benefit from a disruption. They are non-European, the US, Canada, Russia, and Thailand. As you can see, these are the ones that would benefit from a disruption, not the ones that would be harmed. Why would some be harmed? If you look at the chart below, the orange areas might represent those that would be harmed. In this case, China's affected to some extent, and the rest of Asia is a large portion. Where is other Asia? Hey! In Taiwan, Japan, South Korea, and India, as well as Southeast Asia, basically that's us, right? Why is that? Crude oil from the Middle East is shipped to Southeast Asia, Taiwan, and Korea, where we process and refine it. After that, we sell it again as semi-finished or finished products. So that's us, right? And naphtha and crude oil supply disruptions, and then the ethylene production capacity in Asia, which is about 35 million tons per year, right? So as for the next part, the pressure from supply disruptions between China and India is really high, right? And looking at this, about 30% of global ethylene could potentially face supply disruptions. So this is relatively this is a petrochemical product, right? And it's not just ethylene. Let's take a look at another one as well. Let's look at the table above first. This table is also very important, and even without all the details, it's easy for everyone to remember. First, for every $10 increase per barrel, okay, because when a barrel of crude oil is brought to the US and refined, actually, you can roughly estimate this ratio. For every $10 increase per barrel of oil, the price of gasoline goes up by about 30 to 40 cents per gallon. Of course, the purity varies, so the price increase, the ratio and the amount aren't exactly the same either. The refining costs are different too. But the point is, for every $10 increase, oh, I need to mention something first. Previously, it was around 60-something dollars, but now it's over $80. So it's already gone up by $20 or even $30. So you can do the math yourself. So by March 4th, when it comes in, well, this is at 81. So for us, it's still okay. But the most important thing is actually something earlier on that's pretty significant. For every $10 increase, the price per gallon needs to go up by 30 to 40 cents, which matches the 23 days shown on the far right here. On March 2nd, oil prices soared, but it takes 23 days before it actually affects the retail prices at gas stations. Why is that? Well, first, the price goes up at the production site. Then you have to ship it to the US, and after that, it doesn't go straight to the refinery. The refinery still needs to process and refine it. Only when the whole process is finished will the refined gasoline be transported by tanker trucks to the so-called distribution points, which are basically the gas stations for sale. So that's where you see that it takes about 23 days before American consumers actually feel the impact of oil price changes. So whatever Trump is saying right now, we don't even need to pay attention to it yet. If the conflict isn't over in 23 days, when people see the gas prices then, that's when it will really hit them. Man, I think Trump is about to lose it. So basically, it takes about 3 weeks for the changes to show up at gas stations in the US. That's the estimate. Let's just check the timeline. Today is March 6th, so we should expect to see the impact during the last week of March. So you should expect to see news coming out about this, like in the US, people at gas stations will be facing skyrocketing gas prices, prices shooting up, people saying they can't take it anymore. That's pretty much what it's going to be like. All right, just giving you this news for your reference. Now, let's also take a look at gold. Lately, gold has been under a lot of pressure, but I want to remind everyone, if you're not investing with leverage, then maybe you just need to be a little more patient. I think there's still a pretty good chance here, a good opportunity for performance down the line. As for silver, honestly, because it's always been more speculative by nature, at times like this, it might take a while for things to cool off and settle down. Before we wrap up this segment, let me add something for everyone. Since it's Friday, let me share a song with you. It's called War, and the chorus goes, "What is it good for?" This one's by Edwin Starr. You can look it up on Google. Actually, it's an anti-war song, and what I want to say is, I want to be clear. I don't want us reporting on war every day. I don't enjoy it. Why? Because war never solves anything. After seeing it for so long, you realize every war just leaves deeper wounds. So let me just talk to everyone here for a bit. Honestly, I really don't like war. It's unfortunate. But if we look at the predictions from the party market, well, if it's my turn to be on duty at the end of March or April, we might end up talking about war. Ah, and then, well, Big Brother has made a move, huh? Big Brother, huh? This Big Brother is from George Orwell's novel. Now, 1984, I forget. 1984 probably isn't. No, it's that other one, Animal Farm, the one that talks about... So, he abstracted some animals, and actually, Animal Farm is a satire of the situation in the Soviet Union at that time. So, if we're talking about both books, it's, in the novel 1984, there's this country called Oceania. They kept putting up his portraits everywhere, along with slogans like "Big Brother is watching you," so the boss is watching you. In fact, this was mainly a satire of authoritarian states at the time. But the problem is, so after all these years, pretty much any government action gets lumped in here, right? That's why we use Big Brother. The big boss is reaching out his hand. But the main thing here is this news. The US wants to extend its regulations globally, and both NVIDIA and AMD will be affected. So, US officials have already drafted the regulations. This means that without US approval, exports of AI chips to anywhere in the world will be restricted, giving Washington even more control. The issue here is whether other countries will be able to use their chips for AI in the future. That's really the question. It seems like you have the upper hand in AI right now, so what do? You try to control it, but the problem is, it seems like you're targeting China, but have you thought about the fact that other countries also want to use your products? Your chips are already expensive, and now with all these new rules, what if, in the end, you don't manage to take down China, and instead some countries start turning to China after all? Because, after all, China isn't going to be taken down that easily. So, yeah. Those so-called controls, or whatever you want to call them, actually just make things less efficient. If you really want to be competitive, what you're actually doing is letting Nvidia and a few others keep monopolizing the global chip market. Right now, when you crack down on China, China just comes up with a bunch of their own things, like Cambricon or Huawei's Ascend 910, and a whole bunch of these self-developed chips. So actually, this is what happens. I don't know, but right now the US is really turned protectionist, so that's definitely possible. I think that's a pretty big issue. And let me just add one more thing. Here's a question. Do you know what's the most popular thing in Africa right now? Which company has an AI model that's better than the previous ones? If I ask you about Africa, you probably have an idea. It's basically China, right? That's right, it's DeepSeek. Why? Because it's open source, it's cheap, they don't charge you anything, and there are always people from China willing to help out. You can't say that people in Africa can't use AI. They have young people who want to play around with AI too. But with the American systems, you have to pay, while with the Chinese ones, you don't. So if I were broke, which one do you think I'd choose? Of course, it's obvious. They'll use the Chinese one. And don't underestimate that. Africa as a whole has about 2 billion people, so that's actually a huge user base. Their income might not be impressive, but the amount of data they generate could be extremely valuable. That's one part. Now, let's quickly look at another. Recently, Entropy has had some disputes with the US Department of Defense. The main issue is that the US Department of Defense used their system, which, of course, is somewhat related to acts of war. So that probably violates some policies. That's why there have been some issues. So in terms of added value, there might be some legal battles arising from these issues. What's more important is the action Entropy took against the Department of Defense. Some American companies have already voiced their support for him, but honestly, this is pretty controversial. Of course, Anthropic has its own perspective, but on the other hand, the Department of Defense's contract, they can't afford to lose that contract, so it's really a tough situation. But there are a few points I want to mention to everyone. First, let's take a look at this. OpenAI, this is pretty interesting. They've launched a tool called Action to compete directly with Entropy. Now, why are we bringing up OpenAI? Actually, there's also some news about their latest round of funding. So, what does this actually mean? Well, this year, there are 3 major IPOs brewing in the US. The first one, of course, is Elon Musk's SpaceX, which is more of a physical, tangible company. The other 2 are OpenAI. It's a showdown between OpenAI and Anthropic, these 2 software companies. So I think you need to connect all these news pieces together. Is this important? Actually, it's very important. If these new stocks go public, there's a chance they could turn around the current sluggish situation in AI. So please pay attention to this. But we have to say, the business competition here is gonna be pretty intense. It's possible that OpenAI, because of Altman's influence, will take a certain approach. A growth strategy that's more common in the Japanese market, which involves some mergers and acquisitions as well as forming alliances. Android is more like the nerdy, bookish type, just quietly developing and growing on its own. So if you think of it as a tortoise and hare race, Android is probably more like the tortoise, and OpenAI is probably more like the hare. So in this tortoise and hare race, who will make it to the end is still up in the air. But it's possible that after this period of high pressure and the first half of this year passes, the focus will shift back to the IPOs of these two companies. That's why I wanted to highlight this for everyone. Of course, there's one more thing. Oracle's capital expenditures were too aggressive before, so now they're preparing for layoffs. So if you look at this, 26, 27, 28, right? You see that in 26, 27, and 28, their spending was way too high. Then by 2030, there's going to be a huge amount of write-backs. Let me tell you this. The spending in 26, 27, and 28 is real. As for the later write-backs, let's not focus on those for now. Overall, the pressure is still pretty high, but theoretically, layoffs are actually good news, so Oracle's stock price might have a chance to stabilize a bit in the near future. On another note, there was some news from the Federal Reserve. Barkin mentioned this. Their response to the Iran war depends on how long the impact lasts. In other words, if it drags on for a long time, they might take a more cautious approach. So it's basically the same situation. And then he said the labor market seems relatively stable. The implication is that there might not be a need to rush into cutting interest rates. What's interesting is that previously, when he was at that real estate event, before the Fed chair candidate was decided, his stance was relatively dovish. But after the candidate was announced, he switched back to being hawkish, which is pretty interesting. As for the economic data, let me quickly go over yesterday's numbers with everyone. First, since we talked about this during the market open yesterday, let's take another look. The main challenge is that the number of layoffs has decreased, and the import price index in principle has also dropped a bit. There's not much pressure on the import side. Non-farm productivity remains high, and labor costs are reflected there as well. They're managing resources and improving efficiency to lower these costs. In other words, boosting productivity. Now, what's more important is how this is being handled. The gap here is still holding at the first tier, and the real interest rate remains low, but there's some upward momentum. However, let's take a closer look. Basically, what we're saying here is that since initial claims are still staying at a low level, the general interpretation is that the labor market is still in a stable phase, kind of like what Michelle Bowman described. So, relatively speaking, if we look at it from a more straightforward perspective, if the spillover rate stays at the first tier, then the spillover effect on that month's unemployment rate will be pretty limited. And then we did see a wave of layoffs at the beginning of the year, but it was mostly concentrated in certain industries, mainly white-collar jobs, since AI is impacting those positions more. So it's more focused in that area. Looking at the labor market overall, we haven't seen a broader impact yet. Signs of deterioration, right? But what's most important is that in a moment, we'll be able to see the non-farm payroll numbers. So soon we'll see the actual figures. We'll get to that in a bit. So let's skip this page for now. And then last night, there were some earnings reports released pre-market and during the session. For example, Victoria's Secret, even though it's a well-known brand and seems great, its sales actually haven't been good for the past few quarters. So its stock still took a big hit. What we should pay more attention to is Ciena, this software company. Ciena Software is their financial guidance, their outlook fell short of expectations, so that's also a pretty significant miss. These are probably the two main ones to pay attention to. As for after hours, the more important one is Marvell. This company, it's a major player, and some Taiwanese manufacturers have partnerships with them. The stock rose 14.4% in after-hours trading. The revenue outlook looks good, which is nice, but the problem is, Costco, well, their revenue and profits are good, and they're talking about assessing tariff refunds, but the problem is, it still fell by about 1% in after-hours trading. Okay, This software, the stock surged in after-hours trading because their financial forecasts beat expectations. The main thing is, for the fourth quarter, they were originally expected to post a loss, but instead they turned a profit. That turnaround from loss to profit had the biggest impact. Now, as for Gap, their performance wasn't good, mainly because of their sub-brand Old Navy. And Lucida's performance has been declining for several consecutive quarters, so it's on a downward trend. As for the other side, The outlook is good, so the stock went up. Now, CooperVision, which is the contact lens company, raised its earnings guidance for this year, and the increase was better than expected. And when the announcement was made, the stock price went up more than 10%, but in the end, it closed flat. So that's basically what happened yesterday. Tonight, there's a smaller company releasing its earnings report, so just keep an eye on that. But there's something else that's even more worth paying attention to. BlackRock's private credit division is conducting a rapid review, a kind of inspection, and that's something to watch closely. We might need to discuss this further with other colleagues. We need to dig a bit deeper into this. The main point is that during the last earnings report, there wasn't a review, and then suddenly, last time, during the earnings report, they said they would maintain the book value, but then suddenly in this quarter's earnings report, they're saying that this loan is now completely worthless. So is it because someone defaulted, or is it that there were flaws in the lending process? We still need to look into this. So it seems like there really are quite a few issues with private credit, but the question is this actually a big problem? Is it as serious as Jamie Dimon says, or is it more like what Solomon from Bank of America commented? He said there are issues, but not as big as Dimon claims. Honestly, this is something that's pretty hard to track, you know? Why is that? Because it's called private credit, right? Anything that's private tends to have low transparency. If you want to find out more, most of the time it's just rumors or hearsay. Maybe this, maybe that. So it's pretty troublesome. All right, then. Next, in the US, some lawmakers want to review the market access to Chinese car companies in the US. Also, during Trump's second term, the first cabinet member he dismissed was the Secretary of Homeland Security, Noem, who was replaced by someone else. A senator from Oklahoma was appointed, and starting March 1st, there will be some adjustments. So that's the update. It was a bit unexpected, but not entirely surprising, because his dissatisfaction with Noam had actually been building up recently. So he was a bit dissatisfied lately, and that's probably why he was replaced. All right, moving on to some more urgent news. Finally, 20 states have filed a lawsuit over the 10% tariff. Is this the same lawsuit as the previous one about reciprocal tariffs? Oh no, it's not. After the reciprocal tariffs were struck down by the Supreme Court, they said they needed to take further action. So now they're saying they want to challenge his so-called global or universal tariffs, whatever he calls them now. He changed the name. They use Section 122 to impose the tariffs, which allows them to collect tariffs for up to 150 days. But again, people caught on and pointed out that they were using Section 122 to claim a so-called balance of payments deficit. Trump's definition here is wrong, because the balance of payments includes both the trade account and the financial account. You can't just focus on a trade deficit and ignore the surplus in the financial account. So I think I mentioned this before, maybe not during the evening session, but when this issue first came up, I probably talked about it in the morning call or somewhere else. I said that Trump's reasoning for citing this was also wrong, so there's a good chance he could get sued, and that seems likely now. He got sued right away. Over 20 states are suing him. I think most of these 20-something states are probably Democratic, which is pretty obvious. So it really looks like Trump is in serious trouble. Then this news is about India. Basically, American crew members are saying they won't repeat what happened in India 20 years ago. They won't. Given India the kind of economic benefits that China got back in the day, that's what they mean by things like most favored nation status and so on. But let me tell you, if you don't give India those benefits, then India's attitude is going to get really interesting. India is the kind of country that if you don't give them advantages, they just won't play ball with you. You'll see for yourself when the time comes. All right, let's take a quick look at the market. The Dow Jones is still dropping. It had the biggest loss yesterday. Wow. The S&P had a small drop, but the problem is the equal weight index also saw a bigger decline. So you see the major indexes going up, and that's true, but the issue is the 50-day and 20-day moving averages are still acting as resistance. And for Microsoft and the other Magnificent Seven stocks, yes, they're moving up, but again, the 20-day moving average is holding them down. Even if there's a breakout, you have to realize that the 50-day moving average above is gradually trending downward. So overall, there's a lot of pressure on this rebound. People say you never know, right? The risk is still very real, so you really need to stay alert. As for Apple, there's been a bit of a turnaround, but whether it'll stay weak in the short term, we still don't know. Just putting that out there. Now, Amazon looks like it's stabilizing, and the bottoming out seems more clear, but it might just mean it's not dropping anymore. Whether it can actually move up is still questionable. The bigger issue is still Google, right? Why? Because Google used to be the strongest performer, but now that it's started to pull back and consolidate, the $300 level is really worth paying close attention to. The key question is whether this support can actually hold. So Facebook is also still in a consolidation phase, and Microsoft is in the same boat, not doing too well. As for Nvidia, after the volatility, it's just been moving sideways. Now, looking at Tesla, what we see is, over on the Philadelphia Semiconductor Index, what we noticed is that it dropped 1.7% yesterday. What's more important is that Broadcom had a big rally, really surged. We'll take a look at Broadcom's chart in a bit, so pay special attention to that. The main thing here is to focus on Broadcom, then we'll look at Micron and maybe also check out how AMD is performing. After that jump, it cleared the 200-day moving average. But don't rush in yet. Just watch the broader market. When it's dropping, individual stocks rarely go up. It's really tough for a stock to stay strong on its own in that kind of environment. So here, let's see how it holds above the 200-day moving average. Is it just consolidating, or does it surge up and then get pushed back down, testing support before moving higher? The strength or weakness here definitely makes a difference. But the main thing right now is to see if it can actually hold up. Now, as for Micron over here, the day before yesterday, well, actually 2 days ago, there was a drop followed by a rebound. But let me add something. This sector here is actually the strongest one right now. First, if you look at the high point in early February and compare it to the end of March, the high hasn't actually surpassed the previous high. So everyone needs to be careful here. Since it hasn't broken through the previous high, if there's another rebound, it really needs to challenge that 450 mark. Only if it breaks through that will it truly be considered safely past that level. As for the 33 timing here, you can actually see that the last 3 red K lines are lined up, but it's not in a very good state. For Supermicro, it seems to have bottomed out. And for Oracle, we just saw some news, so we can keep an eye on that. The main thing here is that if it doesn't keep dropping, that's still considered good news for the market. In a bit, we'll take a look at the performance of futures in individual stocks. For now, let's see. It's down about 0.3, 0.4, or 0.5% or so. Let's quickly take a look. Let's take a look at Bloomberg's numbers. Oh my God. Okay, so just now was down 0.3, 0.4, 0.5, but now it's 0.6, 1.0, 1.3. So it's not really widening. Now let's check out the performance of individual S&P stocks, ETR. This is a relatively small company. Data center agreement. This might be related to data centers. Looks pretty good. Then there's a chemical company, which seems to have rebounded after a previous drop. CF Industries, that one also seems to be bouncing back. These two should both be related to chemicals. Those ones. They're related to nitrogen fertilizers, so their business is agriculture. Those are also pesticides, related to nitrogen fertilizer. These two stocks probably moved together based on news about pesticides and nitrogen fertilizer. Then there's EXE, which should be an energy company. It looks like energy is still leading the way. Why does the price of oil keep going up? You can see that a lot of the stocks here are LYB, which is related to chemicals. COP is also energy, and NPC is energy too. So it looks like it's all energy. Today, it's still all about energy. They're carrying the weight. Whoa, so the ones that are dropping must be having a pretty rough time. Cooper's earnings report wasn't good, so people are picking it apart, saying the revenue is... It was a slight miss, so the stock dropped. And Corning Glass is pretty weak, probably because the airline sector isn't doing well either. Since oil prices are up, the airline industry is probably about to take a hit. Whoa. Basically, someone else's profit is your cost. That's the idea here. Applied Materials is weak too. There could be more pressure coming, especially if the Philadelphia Semiconductor Index keeps correcting. Even though Applied Materials is following the so-called consumables or arms dealer business model, it's still going to be affected. If you look at today, some of the Philadelphia Semiconductor Index components, some of the more well-known ones, are also pretty weak. Take LRCX, Lam Research, for example. All right, and then this one's pretty weak. So right now, Hong Kong is under a lot of pressure. Now let's take a look at oil prices. Have they actually? They're getting worse and worse, climbing higher and higher. It might first rise to an initial target, then take a breather, and then go up again for another leg. This is a typical pattern. That's the usual way it reacts, but the problem is, if the first target is already pretty high, then there won't be much room for a pullback, and the momentum for another move up could be even stronger, so that's something to watch out for. As for the US dollar, it doesn't seem to be showing much movement today. It's still trading sideways, and gold is the same. US Treasury yields are pretty volatile, but ended up flat. But if you look at the 10-year bond, it's a bit better by comparison, but oil prices are still really bad. And then the S&P futures, just taking a quick look, are still down more than 1%. You see, actually around 6 or 8 o'clock, it was still looking okay, but now it's dropped. So today's market is probably still under a lot of pressure. All right, let's take a look. Yeah, and then let's take a look at the non-farm payrolls. Almost forgot about the US economic data. Okay, non-farm payrolls, sorry, they actually decreased. No wonder. Bond yields are going down, which suggests that the upward pressure on inflation might be offset. So here we need to watch. If this keeps dropping, then that's more problematic, especially since last month in January, it went up after the holidays and then dropped again. That's pretty bad. And the unemployment rate is up to 4.4%. This is really not good. These numbers aren't looking great. It really is pretty bad. And then retail sales are at negative 0.2. This looks basically flat compared to before, which is in line with expectations. Core control is at 0.3, also in line with expectations. So you could say that things here are as expected, but the non-farm employment numbers are not good. So overall, the performance is relatively bonds are favorable, but the problem is today we can clearly see that bonds have improved. That's true, but oil prices are still being pushed up by the situation in the Middle East. So honestly, today's market is pretty unfavorable, and the overall correction pressure is still quite high. Now, let's take another look at everyone's questions. All right, good evening. From our perspective here, like with H33X, it's no longer just up to Trump to decide whatever he wants. That's right, you brought up an issue of international politics. The issue is, this war, it's not like those limited military actions. Once you get involved with a country like Iran on a larger scale, once they're entangled with you, sometimes even if you want to, it's a lot more complicated to end the war because, like I said, as long as Iran has the capability to occasionally launch an attack, it becomes a real headache for Trump. Iran doesn't even have to strike far or hit hard, and they don't need to do anything major. Trump says things like, Iran can't attack the US, but let me give you an example that proves otherwise. Take North Korea, for example. From the very beginning, all the missiles and nuclear weapons they've developed have had just one goal, to reach Japan. Even if they only hit rural areas in Japan, that's still considered a strategic success for North Korea. They don't need to hit the big cities. It's the same thing here. Take Iran, for example. It doesn't need to strike the United States directly. As long as it can reach Israel, the US will still have to get involved, right? But the problem is, you might need a lot of resources, and it's expensive, just like with agriculture. When a major power's aircraft carrier arrives in China, Chinese aircraft carriers are just a joke. Like I told you, I was laughing about it a few days ago, and today a coworker brought it up again. It's possible they're just providing escort and not actually bombing Iran. If they really bomb Iran, though, that would be intense. We might actually see, well, in modern times, the sight of a nuclear-powered aircraft carrier being hit by a missile. As for the progress of this war, let's take a look. Today and up until now, next week we'll switch to jitta for market analysis. Of course, everyone has their own style when it comes to analysis, right? We're just saying, what we're seeing is that it's becoming a long-term situation. Once it drags on, you'll notice this factor will keep affecting our market trends, and honestly, it'll get worse. But let me tell you this, there's actually some good news coming this weekend. If this good news happens, it'll help Taiwan stocks perform better on Monday. So what's the situation? Well, over the weekend, this weekend, the US military has eased up on its attacks on Iran, and then Iran retaliated against the US. Or if the surrounding countries also ease up, that's one thing. This could lead to a good performance for Taiwan stocks on Monday. But what I want to say is, you really shouldn't think this means there will be long-term gains. Why? Because, well, Iran's strategy is basically, if the enemy doesn't move, I don't move. If you don't attack me, I won't retaliate. But the harder you hit me, the more I'll hit back. That's probably how it'll go, because they want to preserve their ability to retaliate. So this is possible, and I just wanted to mention it here. So next week, don't go saying, oh, it's all over tonight, what should I do? And then rush to short or something like that. Let me tell everyone, you need to be careful. It's possible that this weekend, actually, nothing much will happen. But that doesn't mean that after the middle of next week, or once the US work week starts on Monday, there won't be any more attacks. It all depends on how strongly Iran responds, and it'll probably depend on how hard the US attacks. So everyone should pay attention to this. Yeah, that's right. The reason for the plunge was that the non-farm payroll numbers were really bad. So we pretty much know what's going on. So that's that. So that's basically it. The main thing is that we also looked at the fund data. Today, we were pretty lucky. We checked out the non-farm economic data, and then, before the market opened, we also looked at the futures. Still, things haven't improved much. It's a little bit better, but not by much. Almost no improvement at all. So everyone still needs to be careful. Thanks for your hard work today, everyone. Right now, a lot of asset prices are being squeezed, but what really matters is whether there's a turning point. When that happens, there might be some stronger sectors or themes that stand out, regardless of whether it's raw materials or the stock market. That's when you'll see a turnaround here. Before that happens, you probably have to bear the pressure of a decline. All right, if there are no other questions, okay, the last thing. Kunli Kai. Okay, if Trump isn't willing to back down, I think it'll be hard to resolve things peacefully. Let me tell you, even if he does back down, it might not necessarily end well. International politics can be this tricky sometimes, you know? Even if he backs down now, the problem is if Trump holds back and just chats nonsense, it's going to cause him a lot of trouble down the line. I'd say he's already halfway in. Maybe not just his head, but even half his body's in now. So things are pretty complicated for him at this point. So looking at it from our side, there aren't any new issues coming up. So I guess we'll wrap things up here for today. All right, see y'all next Monday. You can count on UG Dai to help everyone analyze the market, and the time will be moved up to 9 o'clock. That's it for today. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.